All right, it's Tuesday, August 26th, 2025, and this is Crypto DeFi Daily. The market was a sea of red today, but the real story is all about who was selling versus who was buying. Let's dive in.
$900 million. That's how much got wiped out from leveraged positions in just the last 24 hours. We're talking one of the most brutal liquidations events for traders we've seen this entire quarter.
And that huge number kicks off our first big story today, a massive market-wide liquidation. So what was the trigger? It looks like a severe Bitcoin sell-off that just completely erased every single gain made since the Fed chair's speech at Jackson Hole.
I mean, at the absolute peak of the chaos, Bitcoin actually plunged below $109,000 on Coinbase. Just to put that into perspective for you, we haven't seen a price like that since way back in early July. That's a 7-week low. So let's talk about the scale of this thing, because it was just massive. We're looking at nearly 200,000 individual traders liquidated. We saw a 12% correction from that all-time high just a couple of weeks ago, and it seems like the major selling pressure really kicked into high gear after a single whale offloaded 24,000 BTC. The end result? The total crypto market cap dipped right back below that $4 trillion mark. Ouch.
So you gotta ask, is all this pain just a necessary evil? Well, according to Bobby Ong, the co-founder of CoinGecko, the answer is pretty much yes. He actually said, we have to go through the tough liquidation days so that we can go up. So yeah, a painful reset, but maybe a necessary one.
Okay, but here's where things get really interesting. While the retail market was absolutely bleeding out, a completely different story was playing out in the institutional world. You see, despite this widespread dip, the smart money, well, it wasn't running for the exits. Not at all. It was rotating into Ethereum.
Yeah, you heard that right. Spot Ethereum ETFs are seeing huge inflows right now. In fact, analysts are calling it a significant rotational shift, a move away from Bitcoin and into Ethereum. And that suggests institutional confidence is still incredibly strong, even when the market looks this shaky.
And the numbers here are pretty striking. Get this, on Monday alone, Ethereum ETFs pulled in almost $444 million. Now compare that to Bitcoin ETFs. They only brought in $219 million. We're talking about institutional capital basically voting with its wallet, and right now it's favoring Ethereum by a 2-to-1 margin. Wow.
All right, let's shift gears a bit. For our third story, we're moving away from market mechanics and into some real-world adoption news. Gemini just dropped something new, a credit card designed to bridge that gap between crypto and, your everyday spending.
So what is it? It's an XRP credit card. And the cool part is, it pays out your rewards instantly in XRP every time you buy something. The cashback structure is actually really compelling too. You get 4% back on fuel and EV charging, 3% on dining, 2% on groceries, and then 1% on pretty much everything else.
And look, this isn't some tiny niche product that only a few people can get. The card is issued by WebBank, and it operates on the MasterCard network. That gives it immediate mainstream accessibility for all U.S. customers. This is actually a pretty significant step for XRP's utility in the real world.
You know, this kind of adoption isn't just happening on the consumer level, it's happening at the sovereign level too. For our fourth story, let's take a look at the UAE and how they're building their national Bitcoin Treasury, with a pretty unique strategy, I might add.
So the UAE's government-backed treasury now holds 6,333 Bitcoin. At today's prices, that's a $740 million position, and that officially makes the UAE the fourth largest government holder of Bitcoin on the entire planet. But what's really interesting here is how they did it. See, unlike countries like the US, China, or the UK, who got most of their Bitcoin from legal seizures, taking it from criminals, the UAE built its entire treasury through direct mining. This is a deliberate, proactive strategy to accumulate Bitcoin, not just some byproduct of law enforcement.
And for our final story today, we're coming full circle, right back to that market tip. Because while a lot of people were panic selling, you can bet some major players saw this as a huge opportunity. And well, they made their move.
Right in the middle of all that chaos, renowned analyst Tom Lee from Fundistrat, he makes this incredibly bold call on X. He just posts, calling ETH bottom to happen in the next few hours. I mean, talk about a high conviction statement during a moment of maximum fear. And guess what? He absolutely put his money where his mouth is. His firm, BitMine, went out and immediately bought the dip. They scooped up 4,871 Ether,
which was worth about $21.3 million when they made the purchase.
So all of this really leaves us with one big question, doesn't it? While retail was selling in fear, the smart money was clearly buying. The only question is, what are they buying next? Thanks for joining us. We'll see you tomorrow.